Pleasant morning, my dear friends. Welcome to the final lecture of liquidation of companies. With this lecture, my entire schedule got completed, as well as liquidation of companies also got completed. I'll try to cover as much as possible in liquidation of companies. Hopefully, we already covered certain portion. Without wasting much time, let me entering into the topic, that is a quick recap. So, basic we are using conceptually, liquidation is procedure adopted for winding up. I mean, whenever a company is decided to go for liquidation, maybe by order of the tribunal, or maybe voluntarily, or maybe by apply the provisions of insolvency and bankruptcy code, whatever the case may be, such liquidation process is going to continue for a certain time period, because in case of liquidation, generally we are realizing different assets, and in a particular order, we will make payment to different parties. So that's why it took some time period. After completion of the entire procedure, finally the court will pass an winding up order to struck such company from the database of the ROC, which is known as winding up order. Am I right? So we see different types of winding up. That is winding up compulsorily or voluntary winding up. In case of compulsory winding up, due to inability to pay debts, IBC code will applicable. Due to other than inability to pay debts, Companies Act 2013 is applicable. We've seen certain circumstances in which the NCLT may order for compulsory winding up. So do you remember such circumstances? The affairs of the company are against the sovereignty and integrity of the country, or maybe a company is incorporated to deceive the public, or the affairs are in a fraudulent manner. The company is defaulted in filing their annual returns for a continuous period of 5 years, or maybe it is just an equivalent basis. It is better to close the company rather than continuation. So at that point of time, the National Company Law Tribunal may order for compulsory winding up. Their Companies Act 2013 provisions are applicable. At that point of time, the petition may be given by the shareholders or the central government or the ROC, as the case may be. So now coming to the voluntary winding up, the entire voluntary winding up proceedings are within the purview of Insolvency and Bankruptcy Code 2016 after 1/4/2017. That is before 31st March 2017. It is another purview of Companies Act 2013. So just for the time being, regulations, but IBC code is very much bigger. We are not seeing all such provisions. So the basic provisions actually explained here, right? So what are such basic provisions we actually discussed? Whenever the board of directors decided to liquidate, then they will give an affidavit about company having no debts, or whether the debts of the company are sufficient to make repayment to all such existing debtors. Along with that, 2 years preceding audited financials. The financials should be audited financials. Such audited financials, along with the valuation report of assets and liabilities, it is generally given by the registered valuer. So registered valuer course we already seen in the ICAI portal I shown at that point of time, which is available for chartered accountants and all other post qualified graduates like the CS and the CMAs and company secretaries. Okay, so from that filing of affidavit within 14 days, it should be approved by the shareholders through a special resolution, or still if the company need to make payment to any creditors, it should be approved by the creditors as well. Then the Insolvency and Bankruptcy Board of India will presume that from the date of resolution, the liquidation proceedings are going to start, and they will appoint the insolvency professional as well, as per that respective regulator. Then the insolvency professional will start realizing the assets and settlement to liabilities in the particular order, and the final copy will submit to the court. Then court will pass a winding up order and intimate to the ROC to stock off a company. Am I right? Now liquidation procedure as per the Companies Act 2013. Now liquidation procedure as per Companies Act 2013 means not in case of voluntary winding up. In case of compulsory winding up, circumstances other than inability to paying debts, that is through the order making by the tribunal. So in such case, the petition at the time of filing petition, either by board of directors or by the central government or by the ROC, whatever the case may be, along with that petition, they need to attach statement of affairs. So what exactly the statement of affairs is? The statement of affairs is prepared by the board of directors, which contains estimated realizable value of assets and estimated amounts payable to the different parties, which should be ultimately useful for the liquidator of a particular company. Whenever a liquidator is appointed, then he will use such a document as a base document for realization of all different assets and making payment to the different liability holders. And the estimated realizable value is also clearly specified by the board of directors in such statement. Such figures, they are taken as a base figures at the time of realization in the real time scenario. Do you understand the significance of statement of affairs? So now then, the liquidator will be appointed. The liquidator, if it is appointed by the court, we can call it as official liquidator. Then the board of directors discharge their rights and duties, and shareholders are, we can term it as a contributories. Now, the affairs of the company are in the hands of the liquidator. But one thing you need to remember, once the liquidator is appointed, sir, business should be stopped now. No, not like that. Once liquidator is appointed, still the business activity is going to be continue up to the date of feasibility. Okay. Sir, statement of affairs, how we prepared actually, we've seen actually different lists, right? Under different lists, the assets are broadly categorized into two types: assets not specifically pledged, assets specifically pledged. Assets not specifically pledged is nothing but those assets which are not offered as a security, which is list A category. Assets specifically pledged means those assets which are offered as a security at the time of availing the borrowings, which are treated as list B category. Then coming to creditors, secured, unsecured, again secured with fixed charge, secured with floating charge. Secured with fixed charge also again I put into list B only. The reason is the related asset is there under list B, right? For example, if I availed a bank loan from a particular bank, we offered stock as a security, then stock is asset specifically pledged. Then the related borrowing is also I will put under list B only, which is secured creditors with a fixed charge. So then coming to unsecured creditors, preferential creditors and other unsecured creditors, you know, as per section 327 of the Companies Act 2013, preferential creditors will have a certain preference. That's why we will make payment to the preferential creditors before making payment to secured creditors with a floating charge. That's why I given list C for preferential creditors, and for floating charge list D, then list E for other unsecured creditors, then list F is for preference share capital, list G for equity share capital. But I didn't discuss anything in detail related to statement of affairs, but simply I jump to the liquidator final statement. So liquidator final statement is a statement prepared by the liquidator after realization of all assets and after making payment to the different liability holders. Now he will start, or he will simply prepare a receipts and payments account. What are the different receipts he will get? He will get receipts from assets not specifically pledged. He will get receipt from assets specifically pledged. But from the receipts, when he will get receipts from the assets specifically pledged, that is like the example I given like security, he will first discharge the security creditors with a fixed charge. For example, the book value of, the realizable value of such security is 6 lakhs and the related loan is, let us assume 5 lakhs. Let us assume 5 lakh for the time being. Then the surplus need to be carried forward. No, not like that, sir. The realizable value of the stock is 6 lakhs, but the related borrowing is there for 8 lakhs. Now you can payable to the extent of 6 lakhs only. Remaining 2 lakhs, you can make it term it as unsecured creditor. Tell me guys. So here I given certain examples at that point of time itself. So now in my example, if you check here, all of you, machinery book value is 10 lakhs, which is realized at the rate of 12 lakhs. Now borrowing, I have 8 lakhs in one case. Then secured creditors with fixed charge is how much? Then unsecured creditors is how much? I given at that point of time itself as a separate example. The same example I discussed by taking a different figures, nothing else. Next, sir, in the order of payment, how we can make payments, sir? First legal charges, then liquidation expenses, then liquidator remuneration, then preferential creditors, then security creditors with floating charge, then unsecured creditors, then preference shareholders, then equity shareholders. Is it right? So liquidator remuneration, we can payable in two ways. One is based on percentage of assets realized by liquidator, or based on percentage of amount payable to different parties. Maybe we may decide that 3% on payment made to preferential creditors, maybe 4% on payment made to unsecured creditors, or maybe 5% on payment made to members of the company. That is nothing but contributories. That is shareholders of the company. Like that also you may fix. But if you fix the liquidator remuneration based on percentage of payments made to the different parties, if the cash is sufficient, okay. If cash is insufficient, we derived a formula that is cash availability into rate of liquidation. I mean, percentage of liquidation, percentage of remuneration offered divided by 100 plus such percentage. So if you check here, I'll show that. So if the cash is insufficient, then the entry is cash available with the liquidator into percentage of commission divided by 100 plus percentage of commission. You need to apply such formula actually. In today's session, we are going to see problem on such liquidator remuneration as well. So now again, come back to the liquidator remuneration. Then preferential creditors. Sir, who are all preferential creditors? I already explained in section 327. Actually, we've seen two different types of creditors. One is overriding preferential payments. Another one is preferential creditors. Am I right? Overriding preferential payments, in detailed discussion I already made. Just for the time being, just I want to discuss what are the different payments covered under preferential creditors. So one big chart is given right in my text, diagrammatic representation. Government taxes within a period of 12 months from the date of liquidation, preceding period of 12 months, what are all the different taxes or duties or cess are payable to the government or municipal authority or central government or the state government, whatever the case may be. So all things are covered under preferential creditors. Or maybe for workmen or the employees, whether you are paying wages or whether you are paying salaries, whatever the case may be, but such workman is not covered under Industrial Dispute Act, because workman covered under Industrial Dispute Act is covered by overriding preferential payments. That is, now the employees or workmen discussed in case of preferential creditors is nothing but other than employees covered under Industrial Dispute Act. Now, in preceding 12 months, 4 months salary you can treat it as preferential creditors. Then, sir, any holiday remuneration, any bonus is payable, any PF, any gratuity, any death or disablement compensation, maybe investigation charges, all such things are covered under preferential creditors. Do you remember, guys, my diagram? I'll show here once again, just a moment. Where it is here? Preferential creditors. Yeah, here it is there. Preferential payments are preferential creditors as per section 327. Government taxes, salary and wages, holiday remuneration, contribution, compensation or death or disablement, PF, pension and expenses of investigation. We already seen that is nothing but preferential creditors. Okay, then secured creditors with floating charge. Most of the times it will cover debentures. Sir, principal along with interest on debentures both are covered under secured creditors with floating charge only. Sir, interest on debentures we need to pay up to the date of liquidation only. From the date of liquidation to the actual date of settlement of the debentures, company will pay only if it is solvent. If company is not solvent, then no need to pay interest from date of liquidation to the actual date of settlement to the debentures. So how we will know whether the company is solvent or not? From the realization of assets, if the company is able to make repayment to all the liability holders up to unsecured creditors, that is before making payment to preference shareholders and equity shareholders, if liquidator having a sufficient cash, then the company is said to be solvent. That's why interest portion after liquidation to the up to date of settlement, you should need to pay only after making payment to unsecured creditors, because after making payment to unsecured creditors only we can realize that whether the company is solvent or whether the company is insolvent. Do you understand? That point also I mentioned. Then next we are going to make payment to unsecured creditors. Next to preference shareholders. At the time of making payment to the preference shareholders, if any arrears of preference dividends exist, then in a provision exists in articles of association, then you can make payment to such arrears of preference dividend first before making payment to preference shareholders. Then you can make payment to equity shareholders. So certain important issues actually here we discussed. During the process of liquidation, if liquidator not having sufficient cash on his hand, and if any partly paid up equity shares are there as on date of liquidation, then it is the right of the liquidator or it is the right of the company to make a call from such equity shareholders. Am I right? Sir, how much call we should need to do? How much call we should need to make? So for that procedure, actually, I discussed it through different problems. That is distribution of cash among the equity shareholders. In two methods actually we discussed. If you really remember, two methods actually we discussed. So problem number 6, I done in two methods. One is we will take the number of shares and we will calculate the total face value. We will work out the total paid up value. We can compare the total paid up value with the surplus cash available. Then to the extent of the paid up capital, we are unable to make payment to the equity shareholders. We can call it as a deficit or expected loss. Such expected loss you can need to distribute in the number of shares ratio. That is, sir, some persons are telling that, some persons actually, as on the last class, sir, on behalf of make it distribute on the basis of shares ratio, you can directly distribute on the basis of face value ratio, na? On the basis of face value ratio, na? So that is also okay, guys. If you want to distribute on the face value ratio, you can distribute the face value ratio as well. Because for all the number of shares, you are multiply with the face value only. Ultimately, you will getting the total face value. If you want to distribute with the face value, it will work out whether the paid up value is equal, whether the paid up value is different, whether the face value is equal, or whether the face value is different. At that point of time, no need to apply the equivalent number of units concept. Please try to understand. If you want to distribute on the basis of number of shares, if the face value is different, next problem we done on the basis of face value is different, having different face values. For category 1, the face value is 100. For category 2, the face value is 50. For category 3, face value is 10. At that point of time, I applied the concept of equivalent units. Without applying the equivalent units, you can directly compare the face value ratios. The total face value ratio, which is 15:20:20, the same ratio you can directly apply without the taking the concept of equivalent number of shares concept. Okay. Now once you distribute the expected loss, if any partner who is having the negative figure, he should contribute cash to the company. Sir, if any if any shareholders. So if any shareholders who is having the negative balance, then they should need to contribute to cash to the companies. If any shareholders having a positive balance, then we should distribute cash to such type of equity shareholders. This is one method actually we seen. Another method, in method number 2, first I will take the surplus cash availability. I will add the notional call. Notional call means, just imagine you can make a call to all the partly paid up equity shareholders, then you will get cash, you will collect cash from all such partly paid up equity shareholders. Then you will know the total availability, how much it is available. Then you can equally distribute among the equity shareholders. Why? Now all the equity shares are fully paid up equity shares. Then on the basis of the number of shares held by them, then you can simply distribute. Now how you can check? Sir, in notional call, they are contributing 18,50,000. Now we are giving like this. Now in the notional call, they are contributing 18,50,000. Now we are giving for category 1 this much, for category 2 this much, for category 3 this much. Am I right? Now concentrate. The net settlement, how we are making, guys, all of you. Sir, from the shareholders from whom we are collecting the call money, how much we are collecting the call money, we'll check. How much I am giving in the form of distribution, I will check. The net settlement only I need to do. I mean to say, for example, a particular category 1 is there. Sir, I am collecting from such shareholders, let us assume 2 lakh. I made a call, let us assume to the extent of 2 lakh. In distribution, again, I am giving to the extent of 3 lakh. Now, no need to ask such 2 lakhs, no need to pay such 3 lakhs. You can only give 1 lakh. You are giving net settlement only 1 lakh, right? Or maybe another category, just I am telling you, another category, sir, they should need to contribute to the extent of 1.5 lakh, sir. But again, we are distributing only simply to the extent of 0.5 lakh. Then we are asking only asking to the extent of 1 lakh. That no need to contribute the 1.5 lakh. Again, we no need to distribute 0.5 lakh. On behalf of doing these 2 acts, you can do only 1 act, which is a net settlement. You can simply make it pay to the extent of 1 lakh. So like this, you can need to be decided under the method number 2. But these type of problems also we come across. Am I right? Fine. Now go back here. With this, actually, liquidator final statement is over. With this liquidator final statement, discussion is over, not related to the problems. Am I right? Till now, I discussed in the previous sessions. Sir, while preparing the liquidator final statement, just I want to mention one thing. Please all of you consider it here. Preferential creditors actually presented after secured creditors with floating charge. Even though as per the act, we should make payment to the preferential creditors first before making payment to the secured creditors with floating charge. But still, for the presentation requirement, I'm talking, not for the payment requirement. For presentation requirement, we will show preferential creditors after secured creditors with floating charge only. You may have doubt, sir, why? In the order of payment only, we will present it now. Why you are presenting again preferential creditors after secured creditors with floating charge, sir? There is a reason. Just the idea behind that system is, idea behind that presentation system is, all the secured creditors should be placed at one place, all the unsecured creditors should be placed at one place. If I, yes, preferential creditor is obviously unsecured creditor, guys, right? Am I right? Preferential creditor is not a secured creditor. Sir, preferential creditors, if you come down, that is after secured creditors with floating charge, then preferential creditors and unsecured creditors are presented at single place. Then secured creditors with floating charge is presented at a single place. That is the only reason. So just I'm mentioning here for presentation requirement. For presentation requirement, preferential creditors need to be presented. Need to present after secured creditor with floating charge. So please bear that point in your mind. Okay, guys. Now, without wasting much time, let me entering into the problem. I already told you today we are going to see certain problems related to liquidator remuneration first. So we completed problems based on overriding preferential payments as well. So just I forgot to revise the overriding preferential payment. What is the concept of overriding preferential payment as per section 326? Before seeing the problem on liquidator remuneration, what is the concept of overriding preferential payment? As per the Companies Act 2013, whenever you are realizing cash from a particular security which is offered as a security at the time of availing any borrowing, which is nothing but assets specifically pledged. Whenever you are realizing cash from that particular asset, apart from that secured borrowing, you should need to make payment to the workman dues as well. That is the right given to the workman. That is the right given to the workman, because such people are lower level people, lower grade people. We should need to contribute such amount to the workman. That is not a overriding preferential payment. That is not a overriding preferential payment. Overriding preferential payment means the remaining balance of workman due. I mean, whenever you are realizing a particular asset, you paid certain workman due, right? After paying such workman due, if any balance is there under workman due, the remaining balance under workman due is overriding preferential payment. Plus, sir, due to making pari passu payment to the workman due, as like in equal footing with the secured creditors with fixed charge, how much amount is foregone by the secured creditors with fixed charge? Such amount is also treated as a overriding preferential payment. Now, in the given case, if you observe, machinery is there for 2,50,000, workman due is there for 1 lakh, and secured creditors with fixed charge is there for 3 lakhs. First, as per the right given in the Companies Act 2013, whenever you are realizing that particular machinery, you are getting 2,50,000. Now, out of which 1/4 portion should goes to the workman and 3/4 portion should goes to the secured creditors with fixed charge. That is 62,500 to the workman, 1,87,500 to the secured creditors with fixed charge. What is the remaining balance of the workman due? 1 lakh minus 62,500, such 37,500 is the overriding preferential payment. And one more thing, how much amount is foregone by the secured creditors with fixed charge actually? How much amount is foregone by the secured creditors with fixed charge? 62,500 amount is foregone by the secured creditors with fixed charge. That amount actually given to the workman, you know, such 62,500 is also, you can term it as a overriding preferential payment. That is the concept of overriding preferential payment. Okay, fine. Now let me enter into the problem related to liquidator remuneration. Just a second. Yeah, please all of you come to problem number 5, guys. Let us have a discussion regarding problem number 5. Friends, are you with me, all of you? Can I proceed with problem number 5? Please let me know quickly. Just I'm opening the mail, query mail. Just a second. Yes, friends. Can I proceed? Please, all of you, let me know quickly. Sir, but in books, someone is telling, sir, but in books, there is liquidator remuneration is paid before liquidation expenses. Yes, sir, I too agree. I know in the study material, liquidator remuneration is paid before liquidation expenses. Here also, most of the times we will do the same thing, but you can observe one thing. Sir, for example, if the liquidator remuneration is payable based on percentage of payments made to different parties, then how it is possible to pay liquidator remuneration before making payment to liquidation expenses? Do you understand? That is only for presentation. You can present the liquidator remuneration before the liquidation expenses as well. So the person who is asking the doubt, just I am clarifying. The liquidator final statement, first I started with legal charges, then immediately I started the liquidation expenses. Just you can put the liquidator remuneration as well. But the real payment of liquidator is based on the how the liquidator remuneration actually we are paying. That decides actually. Okay, hope you understand. So someone is checking, sir, please check the audio. Sir, is it my audio is clear or not? Yes, fine, absolutely. Right. Come back to problem number 5, all of you. A liquidator is entitled to receive a remuneration at 2% on the assets realized, 3% on the amount distributed to the preferential creditors, and 3% on payment made to unsecured creditors. Total 3 different types of remunerations actually here we have. One is 2% on assets realized. Another portion is 3% on payment distributed among preferential creditors. Another portion is 3% on payment made to unsecured creditors. The assets were realized for 50 lakhs, against which payment was made as follows. Liquidation expenses rupees 50,000, secured creditors 20 lakhs, preferential creditors 1,50,000. The amount due to unsecured creditor was 30 lakhs. You are asked to calculate the total remuneration payable to the liquidator. Calculation shall be made to the nearest multiple of a rupee. Concentrate. Let me go to my OneNote. Yes, guys, come to problem number 5, all of you. So liquidator remuneration. Just I want to complete the problem through a small diagrammatic representation. So now liquidator will get total 3 types of remuneration. One is 2% on assets realized. That is 2% on assets realized. What is the total worth of assets realized by the liquidator? It is given that 50 lakhs. That is on such 50 lakhs, he will simply get 2%. How much? 50 lakhs into 2% is how much, guys? Which is 1 lakh, right? Right. Next, he will get 3% on the amount distributed to preferential creditors. 3%, yeah, 3% on amount distributed to whom? Preferential creditors. Now, first one thing you need to check, all of you. Sir, all of you start with the calculator. Now with me, total 50 lakhs is available. Cash with the liquidator, 50 lakhs is there. Now, out of such 50 lakhs, just now I paid the liquidator remuneration of 1 lakh minus 1 lakh. And he given the liquidation expenses of 50,000 minus 50,000. Next, in the order, I will make payment to the secured creditors as well. That is minus 20 lakhs. Minus 20 lakhs. Still with me, 28,50,000 cash balance is available with the liquidator. Then I will start making payment to the preferential creditor. Sufficient cash is there, right? So for checking sufficient cash is available or not, just I made Before making payment to the preferential creditors, with the liquidator 28,50,000 cash balance is available, we can easily make it payment to the preferential creditors. That's why the entire amount of 1,50,000 is payable. 1,50,000 into 3%. How much it is? 4,500. Now the next payment is 3% on payment made to unsecured creditors. 3% on payment made to unsecured creditors. Concentrate. First, let me check the cash availability, guys. Whether the cash is sufficient to repay to the unsecured creditors or not. First, let me check. Sir, opening cash is how much? We already discussed. Opening cash is 50 lakhs. From there, you are paying liquidation expenses of 50,000. After that, you incur the liquidator remuneration as well. That is 1,04,500 total till now. 1,04,500 liquidation expense also incurred. Apart from that, just now you made the payment to secured creditors, which is 20 lakhs. So then preferential creditors also you made, which is 1.5 lakh. Now, can you please tell me how much cash is available with you? All of you, how much cash is available with you? That is 50 lakhs minus 50,000 minus 1,04,500 minus 20 lakhs minus 1,50,000. With me, the cash availability is 26 lakhs 95,500. Am I right? 26 lakhs 95,500 is the cash availability. But the payment made to unsecured creditors is 30 lakhs. Is it cash is sufficient? Now the cash is insufficient to make repayment to the unsecured creditors. Whenever the cash is insufficient, how you can calculate the liquidator remuneration? Formula is there, na? Cash availability into liquidator remuneration percentage. That is R, let us assume, divided by 100 plus R percentage. Now the cash availability is 26 lakhs 95,500 into 3% divided by into 3 by 103, simply into 3 by 103. How much? So I got here 78,510. Am I right? So the remuneration is 78,510. Therefore, total remuneration how much? Total liquidator remuneration 1,04,500 plus 78,510. So total we got 1,83,010. Like this you need to calculate, guys. Do you understand, all of you? Fine. So this type of problems are also sometimes tested in the examination for 5 marks like that. So please bear that point. Maybe in preparing the liquidator final statement, these all are useful as a working notes actually. Okay. So let me check. Problem number 1 I completed. Problem number 2, which is related to overriding preferential payment. The problem is over. So now let us come to the problem number 3, guys, all of you, which is actually related to preferential creditors. I supposed to take up this problem in the last session, but you are not allowing me. So many persons sending messages like anything. So now this is the time for discussion related to problem number 3. A company went into liquidation whose creditors were 36,000. The total amount of creditors are 36,000. This amount of rupees 36,000 includes 6,000 on account of wages of 15 men at 100 rupees per month for 4 months. Now, from the date of liquidation in the preceding 12 months, any of the 4 months salary, we can call it as preferential creditors. So he exactly given which is the 4 months. Sir, total amount is 6,000. That's why the entire 6,000 is coming under the category of preferential creditors. No doubt about it. Then immediately before the date of winding up, 9,000 being the salaries of 5 employees at 300 rupees per month for the previous 6 months. But we are not considering the 6 months salaries. We should only consider the 4 months salaries as only the preferential creditors. That is out of 6 months, you can consider the 4 months. 4 months into 300 rupees per month. That is 1,200. 1,200 into 5, 6,000. So out of this 9,000, only 6,000 only we can consider as a preferential creditors. What he required, first let me check, without reading this, let me check the last requirement. Find the amount of preferential creditors. We are only calculating preferential creditors only. Okay, next, rent for the godown for the last 6 months amounting to 3,000. Is it rent for godown covered under preferential creditors? No, only government taxes, preceding previous 4 months salary, sir, bonus, commission, gratuity, PF fund to the employees, or any investigation expenses. Such all things are only covered under the preferential creditors. Rent for the godown is not covered under the preferential creditor. Income tax, yes, taxes are covered. Income tax deducted out of salaries of the employee 1,000. Such 1,000 is also a preferential creditor. In addition, it is estimated that the company would have to pay rupees 3,000 as compensation to an employee. Sir, death or disablement compensation is also covered under overriding preferential payment for injuries suffered by him, which was a contingent liability not accepted by the company. Maybe during that process, the company is not accepted, but during the process of liquidation, at that point of time, it was not accepted, but during the process of liquidation, the entire cases are favorable to the workman only. So why? Because it is better to provide such amount to the workman. Till now, it is not a contingent liability. We should include this. We should include this. That is how much? 3,000, which is not there under the creditors of 36,000, but I included such 3,000 is also overriding preferential payment. Now, can you please make it total? How much it is? 6 plus 6, 12, 12 plus 1, 13, 13 plus 3, 16,000. Like this, you need to present. So I don't want to take it the problem on again my OneNote. Just wages you can add. Then out of 6 months salary, you can consider 4 months salary. Then TDS you can add. Then death or disablement compensation you can add. But rent of godown for the last 6 months is not a preferential creditors as per section 327. This problem is related to section 327 discussion. Okay. So 3 is also over. Problem number 4, I not yet discussed the concept, just leave it. Problem number 5, just now we completed. 6 is over, right? In the last class itself, related to distribution. Problem number 7 is also over. Now, the major discussion is only related to liquidator final statement. The problems are highly important, guys. Regularly testing in the examination. We will start discussing liquidator final statement problem with problem number 8. All of you, please concentrate. Problem number 8. Just a moment. Right. While reading the problem, please concentrate. Omega Limited resolved on 31st March 2011 that the company be wound up voluntarily. The following was the trial balance extracted from its books as on the date. First, let me check the requirement. You are required to prepare liquidator's final statement of account. Who will prepare? Liquidator. When will prepare? After realizing of all assets and after making settlement to all the parties. In which format I need to prepare? In simple receipts and payments account format I need to prepare. Okay. He is realizing different assets. That is, the trial balance is first given, which is PPE, inventory, book debts, cash in hand, P&L account, 6% is preference share capital. 2 types of equity shares are there. One type of equity shares 100 each and fully paid up. Another type of equity shares is face value 100 but partly paid up. Loan from bank on security of a stock, which is secured creditor with fixed charge. And such stock we can call it as, where is the stock actually? Such stock we can call it as assets not specifically pledged. Assets specifically pledged. Assets specifically pledged. It is there. Inventory is assets specifically pledged. Okay. Then trade payables also given. Like this, you need to identify while reading the problem itself. But all these are book value, guys. The assets realized the following amounts after all costs of realization and liquidator's commission amounting to 5,000 paid out of cash in hand. Okay. So here indirectly he is telling that liquidator remuneration is 5,000. Liquidator remuneration is 5,000 and he realized different assets in the outside market. Now plant and equipment 1,68,000, inventory is 1,10,000, trade receivables is 2,30,000. Calls on partly paid shares were made but the amounts due on 200 shares were found to be irrecoverable. If you check here, 2000 partly paid up equity shares are there now. Out of such 2000 equity shares, the liquidator will make a call on entire 2000 equity shares, but 200 shares from 200 shares, the liquidator is unable to recover the money. Liquidator will get only money to the extent of 1800 shares only. You are required to prepare the liquidator final statement of account. So which is actually basic problem. Please allow me concentrate. Problem number 8, right? Problem number 8. Liquidator final statement of account. Final statement of account. That is in T-shape simple receipts and payments account. I need to draw on, right? So this is receipt side. This is payment side. Right, my format is ready. Hope from your side also format is ready, right? Now concentrate. All of you can simply give here particulars and receipts. Here particulars, payments. Sir, now liquidator will start realizing the assets. First, he will realize all assets not specifically pledged. Am I right? So first, let me check realizations from assets not specifically pledged. I mean those assets which not offered as any security at the time of availing borrowings. PPE. So property, plant and equipment. How much, guys? 1,68,000. You can directly write under the receipt side here. Or you can put it under inner column at a single stage. You can write here 1,68,000 in a single stroke. You can write under the receipts, not an issue. Then inventory is asset specifically pledged. We already discussed. We'll write the next time. Next, trade receivables 2,30,000. Trade receivables is 2,30,000. So is there any other assets we have? So property, plant and equipment taken, inventory, asset specifically pledged, book debts taken, cash in hand is also there now, which is 40,000. So cash in hand 40,000, don't ignore. So which was already realized form, that's why no need to realize again. So there are no other assets exist, right? In assets not specifically pledged. Then you can make it total. How much? 1,68,000 plus 2,30,000 plus 40,000. I got 4,38,000 from assets not specifically pledged. Then you can start with assets specifically pledged. Only one thing is there under assets specifically pledged, that is stock. Now in case of assets specifically pledged stock, which is 1,20,000, that is book value, but realized value is separately given. I'm so sorry. Inventory value, realized value is 1,10,000. Should always consider the realized figures only, don't consider the book values. Okay. But the related borrowing is how much, guys? The related borrowing is loan from bank is there. Loan from bank is 1 lakh. You can reduce immediately loan from bank. So loan from bank is 1 lakh. Now the surplus only you can carry forward to the receipts column, which is 10,000. Am I right? All of you with me? Okay. So now assets realization is over, sir. Assets realization over. Then, sir, don't make call at this stage. Don't make call money at this stage. Yes, I know whenever you are receiving the call money, which is receipts only. Why I'm telling at this stage, you are not making such receipt. You are not recording such receipt. When actually liquidator will make a call to the existing equity shareholders, if the cash is insufficient to make repayment to the other parties, if the cash is sufficient, actually no need to make a call from partly paid up equity shares as well. First, let us check whether the cash is sufficient or not. At the appropriate time, we can go for a call. So now in the order of payment, first, can you please tell me, all of you, in the order, first I will require to pay liquidator remuneration. So there are no legal charges. There is no other liquidation expenses. Directly you can pay, start with liquidator remuneration. That is liquidator remuneration directly given. No need to calculate anything. How much? 5,000 given, right? So which is 5,000 is the liquidator remuneration. Next, guys, in the order of payment, can you please tell me what is the next order? Nobody is talking. Through queries, please all of you check in the order of payment. What will be the next order of payment? Preferential creditors. Actually, I should need to make payment. Is there any preferential creditors is given? Sir, taxes, employee remuneration for the preceding 4 months out of the 12 months. Okay. Anything is given like that? Nothing is there. So that's why the next issue is we can make payment to secured creditors with floating charge. Is there anything is given related to debentures? Nowhere it is mentioned. So this debentures also not there. Then finally, unsecured creditors. If you check the unsecured creditors, trade payables exist. Trade payables exist. Amount is how much? 3,50,000. So now the next payment is trade payables directly unsecured creditors, which is 3,50,000. So we already paid loan from bank, which is secured creditors with fixed charge. Not an issue. Am I right? Now all of you, can you please check with the liquidator how much cash is available? He started with 4,38,000. Then he realized 10,000 from assets specifically pledged, minus remuneration 5,000, minus trade payable 3,50,000. With him 93,000 cash is available. All of you in your calculator, do you have 90,000? Am I right? Then liquidator with him 93,000 cash balance is there. Next, in the order of payment, to whom I should need to pay? Preference shareholders, 1 lakh I need to pay. Now all of you please concentrate here. So for preference shareholders, I need to pay 1 lakh, but with me only 93,000 balance is there. But with me only 93,000 balance is there. Now, cash available with the liquidator before making payment to preference shareholders. In the order, next I should need to make to preference shareholders. Before making payment to preference shareholders, cash availability is 93,000. But the preference share capital is there for 1 lakh. Now the cash is insufficient. If the cash is insufficient, then you can go for call. You can go for call. Let us assume we made the entire call. That is, we made a call for the entire unpaid value, which is 25 rupees per share on 2,000 equity shares. But it's clearly given that only we receive call money on 1,800 shares. 200 shares were found to be irrecoverable. So that's why if you made a call, then you are receiving on 1,800 shares only. That is receipt of call money. Receipt of call money. Sir, this is not originally you are not making. This is notional call only. Notional call only. You will check the net settlement only now. Always under method number 2, how we are making distribution among the shareholders. I told you now. First you should make the notional call. That is 1,800 equity shares into 25 rupees. How much? Which is equal to 45,000. So total is 45,000. That is 93,000 plus 45,000. So total I will get 1,38,000. Now you can able to make payment to preference shareholders, guys. Minus preference shareholders, 1 lakh you can pay here. Now still you have 38,000 cash with the liquidator, right? The 38,000 is the surplus cash available to equity shareholders. Available to equity shareholders. Now all of you please check here. Sir, total 4,000 equity shares are there. But out of such 4,000, 3,800 equity shares are only the real shareholders, because we are not getting call money from 200 shares. Am I right? That's why we are going to distribute such surplus only to 1,800 equity shares. Therefore, surplus cash per equity share is equal to 38,000 divided by 1800 shares. How much? Sorry, 3,800, not 1800 here. 3,800 shares. Total 2,000 plus 1,800. Na? Here total 2,000 plus 1,800. Total 3,800 shares. That is equal to 10 rupees per share. Now all of you please concentrate here. What happening here I will tell you. Sir, total 2 different types of shareholders are there. Na? One type is 2,000. Another type is 1,800. Now these 1,800 shares are partly paid up. These 2,000 shares are fully paid up. Now we made the notional call from partly paid up shareholder. We made the call here 25 rupees per share. Now we are giving the surplus. We are giving the surplus here for both the parties. Here 10 rupees. Here we are giving 10 rupees. Now with this, what is the conclusion I am making? For category 1 shareholders, we are giving 10 rupees. That means for 2,000 equity shareholders, at the rate of 10 rupees each, you need to distribute, which is nothing but 20,000. Now what about 1,800 equity shares? They should contribute 25. Again we are giving 10 rupees. Rather than asking 25 and giving 10 rupees, it is better to ask the net 15 rupees, right? That's why I should make the call money from 1,800 equity shares at the rate of 15 rupees each. This is the call money we should need to ask. How much? 1,800 into 15 rupees we are asking them, which is 27,000. Am I right? Now concentrate all of you. Let me ask the call money, which is 27,000. Let me write here cash received from partly paid up equity shares. That is at the rate of how much, guys? At the rate of how much? 15 rupees per share. At the rate of 15 rupees per share. That is 18,000 into 15. How much we got? 1,800 into 15. How much we got? 27,000 rupees. Now all of you please observe here. Please concentrate. Now again I am rebuilding the problem. Cash availability before making payment to preference shareholders, how much? 93,000. Now 93,000 plus I have this 27,000. In reality, 93 plus 27,000, I have totally 1,20,000 with me. This is 93,000. That and all is notional call. Now in the come to the reality, before making payment to the preference shareholders, I have 93,000. Now I get cash from the partly paid up shareholders 27,000. 27 plus 93, total 1,20,000. Now you can make payment to preference shareholders first. Preference shareholders, that is 1 lakh over. Now still with you 20,000 cash balance is there, na? 93 plus 27 is 1,20,000. 1,20,000 minus 1 lakh is equal to, still with you 20,000 balance is there, na? The such 20,000 you can make it payment to equity shareholders. Equity shareholders. How you are paying? For 2,000 equity shares, you are paying at the rate of 10 rupees each, which is nothing but 20,000. You can make it totals, guys, here. Like this, you need to work out. Like this, you should need to work out distribution of cash among the equity shareholders, which is working note number 1. Calculation of call to be made from partly paid up equity shares. From partly paid up equity shares. Ultimately, we learned from this working note such issue only, right? Tell me, yaar. Ultimately, we calculated call money to be made from partly paid up equity shares only, and how much amount I need to distribute among the equity shareholders as well. Do you understand, all of you? So can I proceed further, guys? Let me know if you have any doubt here itself, which is a simple liquidator final statement. Crystal clear, sir? Okay, sir, got it. Yes. Can I proceed, all of you? Can I proceed to the next problem? We already done how under method number 2, how you can distribute among the various equity shareholders. We already discussed. Yes, right? Can I proceed? Fine. So now please let me go to the next problem, which is problem number 9, guys. Which is problem number 9. Again, a full-fledged problem based on liquidator final statement. Please all of you check here. M Limited resolved on 31st December 2010 that the company be wound up voluntarily. The following were the ledger balances extracted from its books as on the date. Equity shares given, preference shares given, plant less depreciation written off 85,000, which is the net book value. Stock in trade, trade receivable, trade payable, bank balances, preliminary expenses, profit and loss account, debit balance as on 1st January 2010, maybe, which is the opening P&L account balance, opening P&L debit balance, that is accumulated losses, outstanding expenses given, including the mortgage interest. In such outstanding expense of 25,000, certain interest is there. Certain interest on mortgage loan is there, including mortgage interest means interest on mortgage loan. Where is the mortgage loan? Here it is there, 4% mortgage loan, which is secured by a floating charge, which is not secured by fixed charge, which is secured by a floating charge he is given. Sir, if it is 2 lakhs, then you can tell me how many number of months the interest is outstanding, not known at this stage. If we read the further information, we may know how many number of months the loan is outstanding. Accordingly, you can calculate the interest on mortgage loan. Then you can segregate the outstanding expenses into the real outstanding expenses and mortgage interest. Okay. On 1st January 2011, the liquidator sold M Limited's plant for 2,05,000. Here plant is there na, for 2,15,000 worth book value. He sold at 2,05,000, and the stock in trade for rupees 2 lakhs. So stock in trade is there na, which is for 2,50,000. He sold out for 2 lakhs. Total how much? 2 lakhs 5 plus 2 lakhs, 4,05,000. Total through realization of both the assets, he got 4,05,000. The sale was completed in January 2011, and the consideration is 4,05,000, satisfied as to rupees 2,62,200 rupees in cash. Out of this 4,05,000, 2,62,600 rupees in cash. And as to the balance, how much is the balance here? Can you please tell me first? Work out the balance. 4,05,000 minus 2,62,600. The balance amount is 1,42,400. Now, for such balance amount, we are receiving 6% debentures of the purchasing company. Maybe in amalgamation, multiple times we've seen, if you sold out your business, you will get a particular equity shares or preference shares or maybe debentures of the purchasing company. Now here he got 2,62,600 cash. For this 1,42,400 he got debentures of purchasing company, which is nothing but like investments, which is nothing but for your company, you are getting it as an asset. Investment in debentures of the purchasing company, you will get 1,42,400 issued to the liquidator at a premium of 2%. At a premium of 2% means, let us assume the face value is 100 and the issue price is with premium means 102 rupees. Then how many number of debentures issued by purchasing company to the liquidator? 1,42,400 divided by 102. 1,42,400 divided by 102. How much we got, guys? It is not 600, sorry, that's like coming wrongly. 2,62,200. So the remaining is 1,42,600, I think so. Okay, now 1,42,600 divided by 102. One second. So this is 2,62,200, right? Absolutely fine, right? Remaining balance, can you please work out first? 4,05,000 minus 2,62,200. I got here 1,42,800 remaining. Now each debenture is issued at the rate of 102. Then how many number of debentures issued by purchasing company to the liquidator? 1,42,800 divided by 102. You got 1,400 debentures. You got 1,400 debentures. Okay, now all of you please concentrate. Now, through realization of plant and stock, I got 2,62,200 cash, and I got 1,42,800 worth of debentures. Yes, not only cash, whatever you are getting through realization, that such realization you can show under the receipt side. Okay. The remaining steps in the liquidation were as follows. The liquidator realized 52,000 out of the book debts, and the cost of collection amounted to 2,000. May I know the net collection from the book debts? 52,000 minus 2,000. The net collection from the book debt is 50,000, which is also shown under receipt side. Next, the loan mortgage was discharged on 31st January 2011 along with interest from 31st July 2010. I mean, the loan is outstanding for 6 months. If the loan is outstanding for 6 months means interest portion is how much? 2 lakhs into 4% into 6 by 12. Can you please tell me, guys, all of you, interest portion is how much? 2 lakhs into 4% into 6 by 12. So the interest portion is 4,000. If the mortgage loan interest portion is 4,000, remaining amount is the pure outstanding expenses. So the remaining amount of pure outstanding expenditure is 21,000. Why you need to segregate? You know, at the time of making payment, secured creditors with floating charges total 2 lakhs 4,000, because mortgage loan along with interest on mortgage loan will also belongs to secured creditors with floating charge. But the remaining outstanding expenses, you can make it term it as unsecured creditors. That's why first you should need to pay 2 lakh 4,000. After that, you can pay the unsecured creditors or outstanding expenses. That's why you need to split. Okay, come below. What is the other information is giving? Trade payables were discharged subject to 2%. Subject to 2% means trade payable 75,000. You are discharging at the rate of 98%. How much you are paying to the trade payables? At the rate of 98%, you are paying 73,500 to the trade payables. Okay, fine. That is also unsecured creditor. And outstanding expenses excluding mortgage interest were settled for 2,000. Oh my God, this 21,000 is settled for 2,000. Okay, fine. On 30th June 2011, 6 months interest on debentures were received from M Limited. What is this, sir? Sir, we are getting as a investment in debentures of X Limited na. Sorry, investment in debentures of purchasing company na. We are selling certain assets. We are getting cash as well as debentures na. Now he is telling that on such 1,400 debentures, what we will get it as a PC, one of the receipt. On such we are receiving the 6 months interest. Sir, 6 months interest means number of debentures 1,400 into face value 100, 6 months. And how much percentage? How much percentage we will get it, guys? 6% debentures into 6% debentures into 6 by 12. Can you please calculate the interest, all of you? 1,400 into 100 into 6% into 6 by 12. I got 4,200 amount of interest I am getting from the investment in debentures, which is also one of the receipt. You should need to consider under the receipt side. Okay, liquidation expenses amounting to 3,000. Liquidators remuneration of 3% on the disbursement to members were paid on 30th June 2011. Now here the liquidator remuneration is 3% on payment made to members of the company. The preferential shareholders were paid out in cash. The debentures of M Limited, we have a purchasing company debentures, which are 1,400 debentures for the worth of 1,42,800. And the balance of cash were distributed ratably among the equity shareholders. This is the distribution to shareholders. We will see at the end of the problem. Prepare liquidator statement of account showing the distribution. First, I will structure the problem. Please all of you concentrate. I will start doing this problem with receipts. First, I have two receipts. One is through realization of plant and stock in trade. I got 2,62,200 in the form of cash, 1,42,800 in the form of debentures. Apart from that, I also get interest on such debentures to the extent of 4,200. Such thing also I should need to consider. Apart from that, I received the book debts, realization from book debts, which is 50,000. This is the total cash available with the liquidator. Then I'll start making payment to different parties. The first and foremost issue is liquidation expenses 3,000. You can make it pay. Liquidator remuneration, actually we can need to present, but if you want, you can first to present the liquidator remuneration, then after that liquidation expenses. But without knowing the how much amount disbursed to the members of the company, we are unable to calculate the liquidator remuneration. That's why I don't pay the liquidator remuneration at this stage. Okay, then liquidation expenses. After that, you should make payment to the mortgage loan. 4% mortgage loan is total 2,04,000. After that, you should need to make payment to unsecured creditors. If you check the total unsecured creditors, trade payable is there for 73,500, and the outstanding expenses we paid for 2,000. Apart from that, is there any other unsecured creditors exist? There are no other unsecured creditor. After that, you should make payment to the preference shareholders. So the preference shareholders were paid out in cash. How much amount we should need to make payment to the preference shareholders? That is 1 lakh. You can make payment to the preference shareholders. Am I right? Now, the last final settlement is to the equity shareholders. Now, for equity shareholders, it is clearly given that the debentures of M Limited, we have 1,42,800 now. Such debentures you should need to make distributes to the equity shareholders, and the balance of cash, if anything of cash is there, such cash also you should need to distribute among the equity shareholders. So like this, you should need to make to present the problem. Now let me start in my OneNote. All of you please concentrate here, which is problem number 9. Yeah, just which is problem number 9. What I should need to present? Again, liquidator, final settlement. Then you can start presenting the liquidator final statement, guys. Please come below. Yeah, I think so. It is more than enough. So please, all of you, make ready the format from your end as well, quickly. Which is a simple reception payments account. That is particulars, receipts, or you can write like this, sorry. Receipts amount rupees, receipts amount rupees, payments amount rupees, payments amount rupees. Am I right, guys? Which is receipts and payments account only. Now, first we are realizing two different assets, that is plant and stock in trade. You can write like this: realization from plant and stock in trade. Plant and stock in trade. So you are realizing two forms. One is cash form. One is cash form. So in cash form, how much you are realizing? 2,62,200. In the form of debentures of M Limited. The purchasing company is M Limited. The worth is 1,42,800. 1,42,800. In bracket, you can mention 1,400 debentures at the rate of 102 each. Apart from that, you are receiving interest on such debentures as well. You can include at this stage, not an issue. Interest on debentures. How much worth you are receiving? 1,400 into 100 into 6% into 6 by 12. Am I right? That is interest I am getting 4,200. This is actually the total realization from plant and stock in trade. The total realization, it is 2,62,200 plus 1,42,800. This is I got 4,05,000. So interest on debentures you can directly enter here, which is 4,200. Don't enter in the inner column. You can directly enter here. Okay. So next, after that, you realize the book debts as well, right? So realization from book debts. Realization from debtors. Book debts means debtors only. How much gross realization? You will get 52,000, from which actually expenses are incurred, right? Less realization expenses, 2,000 net, you are getting 50,000 actually. So these are the different realizations made by the liquidator. Now you can start paying the different amounts. First, you will start with a liquidator remuneration actually, but liquidator remuneration I will know at the time of making settlement amount, at the time of making settlement to shareholders. So liquidator remuneration, just I'm putting as a hyphen. So I'm not mentioning anything. At the appropriate time, I will fulfill it. Next liquidation expenses. So liquidation expenses is given, right? How much is the liquidation expenses? 3,000. Liquidation expenses is the 3,000. Next in the order, secured creditors. Actually, preferential creditors you should need to make payment, but there are no preferential creditors. So that's why secured creditors with floating charge. Come here, secured creditor with a floating charge. In bracket, you can write mortgage loan plus interest as well. Mortgage loan plus interest as well. That is interest on mortgage loan. How much, guys? That is 2 lakhs plus 4,000, which is 2 lakhs 4,000. Am I right? So next, you can make payment to unsecured creditors. Unsecured creditors, how much you should need made to payment? 73,500 is related to trade payables and 2,000 is related to outstanding expenses. You can write in the inner, which is trade payable, we are paying 73,500, and for outstanding expenses we are incurring 2,000. Now total 75,500. Am I right? All of you with me? Now how much cash balance is available with the liquidator? Can you please check, all of you? How much cash balance? So out of this 4,05,000, 1,42,800 are the debentures. That point you should need to remember. So just including the debentures, how much balance is there with the liquidator? Let us have a look. 4,05,000 plus 4,200 plus 50,000 minus 3,000 minus 2,04,000 minus 75,500. So now still with the liquidator at this stage, balance with the liquidator at this stage, that is before making payment to preference shareholders, 1,76,700 is available, guys. 1,76,700. This is before making payment to preference shareholders. Now out of this 1,76,700, you know 1,42,800 is debentures, remaining amount only cash. So then remaining cash is how much? 1,76,700 minus 1,42,800. So remaining cash is 33,900, guys. Cash is 33,900. Check somewhere we missed any receipt. Can you please cross check, all of you? Any other receipts I missed out? Oh my god, bank balance I didn't consider. Opening bank balance is there now, 74,000. Okay, no issue, I'll consider here. Bank balance is there for 74,000. Yes, sir, if I add the 74,000 here, now the cash balance is 33,900. 33,900 plus 74,000 is also there. Total 1,07,900 cash balance is there, guys, which is not 1,76,700, which is 700 plus 74,000, which is 2,50,700 I have. I ignored to add the bank balance. Bank balance is there now in the problem. If you check here, bank balance is how much? 74,000 is the bank balance now. I added the bank balance. Then before making payment to the preference shareholders, total I have 2,50,700, out of which debentures 1,42,800, out of which cash is 1,07,900. Then it is clearly given in the problem that preference shareholders were paid out of cash. So preference shareholders paid out in cash means preference shareholder 1 lakh we should need to pay. That is remaining cash availability is 7,900. Now you can make it payment to the preference shareholders. Sufficient cash is there, which is 1 lakhs. Now you can make it payment to the equity shareholders. Now to give the equity shareholders, 7,900 cash is there and 1,42,800 debentures are there. Now debentures of M Limited is there for 1,42,800 and the remaining cash balance is there for 7,900. Sir, here there are no different types of equity shareholders exist. All are equal equity shareholders. Face value is same, paid up value is same. Okay, with this liquidator final statement is over. If you check, finally he told that the debentures of M Limited and the balance of cash is 7,900. After making payment to the preference shareholders, the balance of cash is only 7,900. That's 1,42,800 plus 7,900. You should make payment to the equity shareholders, which is 1,50,700. So once if you paid the remaining balance to the equity shareholders, then the total receipts and the total payment should need to be equal. Like this, you need to present the liquidator final statement. But one thing is sure, guys, this answer is wrong. Yes, this answer is wrong. I will tell you, where you paid the liquidator remuneration. Where you paid the liquidator remuneration. That's why I told you the answer is wrong. Just for understanding purpose, I told you. Okay. But before making payment to the equity and preference shareholders, first you should make payment to the liquidator remuneration. Please, all of you concentrate here. Now I am revising the problem. Intentionally, I did like this. In the examination also, you may do like this. Then you may feel that the answer is correct. Right? Please concentrate, all of you. Now, balance with the liquidator before making payment to the preference shareholders and the liquidator. Before making payment to the preference shareholders and equity shareholders and the liquidator remuneration, that is 2,50,700. Am I right? Now just I am rubbing all these things. Concentrate. So now out of this 2,50,700, 1,42,800 is debentures, 1,07,900 is cash. That is absolutely fine. But this balance is available both for the liquidator remuneration, for preference shareholders as well as equity shareholders. First, let me work out liquidator remuneration. Liquidator remuneration is equal to 2,50,700 into percentage. Sir, ultimately this 2,50,700 is available for cash, available for distribution both for liquidator as well as members. That's why the given percentage is 3%. You can apply R by 1 plus R. 3 by 103. You know the logics and all such things. Right now, I don't want to explain anything. Whenever the cash is insufficient to make payment to the liquidator as well as the other parties, then you should apply this formula. Then liquidator remuneration, how much? 2,50,700 into 3 by 103. Liquidator remuneration, I got 7,302. 7,302. In bracket, you can mention 2,50,700 into 3 by 103. Now you can check, guys, all of you, after making payment the liquidator remuneration, how much cash balance is with you? If you reduce such 7,302, which is liquidator remuneration, then you have the cash balance of 1,07,900 minus 7,302. I have 1,05,998, which is the cash balance remaining, guys. Now, out of this 1,05,998, you can make payment to preference shareholders. 1 lakh. Still, you have cash balance of 598. So this portion is correct to the preference shareholders 1 lakh only. But for equity shareholders, debentures of M Limited 1,42,800. Yes, that is fine. But cash balance is not 7,900. Cash balance is only 598. If you can add total, how much you will get? 1,42,800 plus 598, 1,43,398. This is the absolutely correct answer. Now, whenever liquidator remuneration is there based on the percentage of payments, you should apply the formula like that, and the remaining cash balance only you should need to distribute among the different parties. But without paying the liquidator remuneration, it is not possible to distribute among the preference shareholders and equity shareholders. Now the balance with liquidator 2,50,700. First I work out the liquidator remuneration. I got the liquidator remuneration of 7,302 with the available cash balance. I reduced that. The remaining cash balance I got 1,598. Out of such 1,598, I paid to the preference shareholders. Now I am having 1,42,800 debentures as well as 598 cash balance. Now such things actually you can make it payment to the equity shareholders. That liquidator final statement is over. Hope you understand, guys, this issue as well. So please all of you take the break up to 8:30. We will assemble back by 8:30. We will continue our discussion. Okay. So Welcome back, guys. Sir, still some more problems are there based on liquidator final statement of account in my material, but I don't want to take up such problems right now. Only one or two problems are there, I think. So problem number 10 is also related to liquidator final statement of account. Because due to time constraint, still we have only 1 hour. Still, I need to explain 2 more models actually. Okay, rather than taking problem number 10, it is better to explain 2 more models for the discussion. Okay, so problem number 10, I'll give it as HW. If you have any doubt, you can ask through the mail. Not an issue. I will resolve your queries. And one more thing, if I unable to spend much time on queries for today due to lack of time, okay, so you can send the queries, all such queries through mail. I will give a reply properly with a lot of patience. Not an issue. Okay, so I think so only we are having 1 hour. That's why I am telling all such information. Okay, so come back. The next important concept we need to discuss is the concept of list B contributories. List B contributories, which is liability of list B contributories. The exact concept is liability of list B contributories. If you check in the overview, what are all the different problems we are going to discuss in this chapter, where I clearly mentioned liquidator final statement is the first importance. The second importance is overriding preferential payments and preferential creditors. And the next one, liability of list B contributories in the next level of importance. Am I right? Fine. We are now discussing about the liability of such list B contributories. Sir, first of all, what is the meaning of list A contributory? What is the meaning of list B contributory? What are all the, who are all the shareholders exist as on date of liquidation? Who are all the shareholders exist as on date of liquidation are known as list A contributories. List A contributories means shareholders exist as on date of liquidation. As on date of liquidation. So now what is the liability of list A contributory? We know already, to the extent of unpaid value of such shareholder can be made a call in the form of call by the liquidator. That is nothing but liability of the list A contributory, we know. Sir, then who are all such list B contributories, sir? Please allow me concentrate. Let us assume the date of liquidation is 1/4/2021. This is the starting period of the date of liquidation, let us assume. Then, who are all the shareholders transferred their shares? Who are all the shareholders transferred their shares during preceding 12 months from date of liquidation are known as list B contributories. From the date of liquidation in the preceding 12 months, who are all the shareholders transferred their shares during this period are technically known as list B contributory. Are technically known as list B contributory. I mean, let us assume this is 1/4/2021 means the starting date is here 1/4/2020. After 1/4/2020, who are all the shareholders transferred their shares to the other parties? Such other parties are list A contributories. Now the persons who transferred their shares are known as list B contributories. Let us assume as on 1/5/2020, 1/5/2020, X transferred 1000 shares. X transferred 1000 shares to Y. Now Y is list A contributory as on 1/4/2021. X is list B contributory. I hope you understand the difference between list A contributory and list B contributory. Now, the next question coming into your mind is, sir, why liability is still extended to list B contributory, sir? Already list A contributories are there, na? We can ask, we can make a call from the list A contributory, na? Why there is a necessity to ask money from list B contributory? Once the liquidator will raise a call to the list A contributories, and if the list A contributories are unable to make payment, if the list A contributories are unable to make payment to the liquidator, then liquidator will have a right to ask money from list B contributory. Now please all of you concentrate. When the liability of list B contributories will be crystallized, two conditions simultaneously satisfied. One condition is there is not enough cash to distribute among the various parties during the process of liquidation, and if the liquidator is raise a call to the list A contributory, then such contributories are unable to make repayment to the liquidator, then liquidator have a final choice to ask money from list B contributories. Am I right? Now hope you understand when liability of list B contributories is arised. So just I am putting here the same thing. Now I am not discussing about what is the how much is the liability of list B contributory. First I am discussing about when such liability arise, that is existing cash balance with the liquidator insufficient to repay liability holders or members, whatever the case may be, and list A contributories unable to make payment, then liability of the list B contributories will arise. The next question, how much is the amount, sir? That is the next question. Sir, do you know in case of companies concept of limited liability is applicable, whether those are such contributories are list A contributories or list B contributories, to that extent of unpaid value only a liquidator can raise a call, right? I mean, suppose on these 1000 shares face value, let us assume at the rate of 10 rupees, out of such 10 rupees, the paid up value already paid at the rate of 6 rupees. Now on this 1000 rupees, what is the maximum amount we can call during the process of liquidation to the extent of remaining unpaid value, which is 4 rupees. That is number of shares transferred into unpaid value. Not only this, guys, not only this, sir, why there is a why we are causing X is also why X we are taken into consideration for the purpose of making realization, for the purpose of making the amount during the process of liquidation. Please all of you concentrate. Why we should consider X is also one of the contributors during the process of liquidation. The reason is on the date of making transfer of shares from X to Y, certain creditors balance is outstanding. For example, at the time of making transfer from X to Y, the creditors balance outstanding is 5,000. The same creditors are existing as on date of liquidation as well. That is the reason why we are causing X as well. Do you understand? So that means the liability of list B contributories is number of shares transferred into unpaid value or creditors outstanding as on date of transfer, and such creditors are also existing as on date of liquidation, whichever is lower. For example, in this case, number of shares transferred 1000 into unpaid value is 4 rupees, so which is equal to 4000, or creditors outstanding as on date of transfer 5000, so whichever is lower, that is 4000 is only the liability of the list B contributory. Now the liability of the list B contributory is restricted to the lower of the below, that is unpaid value of the number of shares transferred or the creditors existing as on date of transfer, whichever is lower. Next, so when we should need to crystallize the list B contributories, we seen how much amount of the liability we can work out for the list B contributories also we seen. Am I right? Now the next question is, sir, for example, more than one list B contributory exist. More than one list B contributory. Sir, for example, as on 1/5/2021, we transferred, right? Like this, I will take some transaction here. Please, all of you concentrate. As on 1/5/2020, creditors outstanding is 5,000. Next, as on 1/7/2020, the creditors outstanding were 6,000. Next, as on 30th September 2020, creditors outstanding were 8,000. And as on 1st February 2021, creditors outstanding was 8,500. So just let us take certain creditors outstanding balances here. Now from 1/4/2020 to 31st March 2021, all these persons, all these transfers are occurred, that is X to Y, okay, A to B, C to D, let us assume E to F. Now all these parties, that is X, A, C, E, all these parties are technically known as list B contributories, no doubt about it. Now you should check how many number of shares transferred as well. So how many number of shares transferred as well, also you need to check here. 1,000 shares transferred, let us assume. Here 500 shares transferred. Here 1,500 shares transferred. Here 100 shares transferred. You know, for each and every transfer, the only paid up value is 6 rupees, unpaid value is 4 rupees in all the circumstances. That is common. Face value is 10 rupees and the paid up value is 6 rupees. That is quite common. Now you should need to work out the total liability of the list B contributory. Now the question is, you should need to work out the total liability of list B contributory. How much is the liability of list B contributory? Now concentrate, all of you, one by one. Sir, now on this creditors outstanding 5,000, who are all responsible? You know, X is responsible, A is also responsible, C is also responsible, E is also responsible. Why, sir? This 5,000 is exist, such creditors balances exist at the time of transfer of shares by X to Y, at the time of transfer of shares from A to B. Why? Because in this 6,000, 5,000 is also there. In this 6,000, 5,000 is also there, means on this 5,000, A should also be responsible, C should also be responsible, E should also be responsible. Do you understand? Sir, in which ratio they should contribute, sir? Now X, A, C, E, in which ratio they should need to contribute for the liability of, for the creditors of 5,000, for the creditors of rupees 5,000, they should contribute in their number of shares holding ratio. Here 1,000, 500, 1,500. I'll take this one also 500. Okay, for better calculation. So now 1,000, 1,500 plus 1,500, 3,000, 3,000. Here it is 500 shares. Am I right? Fine. So can you please check the ratio here, all of you? 2:1:3:1. So this is the ratio, right? 2:1:3:1. Now 5,000 you can distribute in that particular ratio, guys, all of you. 5,000 into 2/7. That is 1,428 or 1,429. Next, 5,000 into 1/7. So like this you need to distribute. I can't put each and every figure, guys, so I'm not having sufficient time. Please bear with me. Like this you need to distribute, right? 5,000 in that ratio. Next, sir, what about 6,000? So out of this 6,000, 5,000 you already taken, right? Remaining 1,000 only you can talk about now. So on the remaining 1,000, the incremental creditors, and the incremental creditors of 1,000, who are all responsible? You know, now X is not responsible, because at the time of transfer of shares from X to Y, only 5,000 is the creditors. Now on this incremental creditors, A is responsible, C is responsible, E is responsible. That's why on this 1,000 they should need to distribute in 1:3:1. Not here. They should distribute like here from ACE. Next, for the incremental amount of 2000, who are responsible, sir? Only C and E is responsible. X and A are not responsible. Now the incremental creditors of 2000, now C and E say they should distribute in 3:1 ratio. Next, coming to the last creditor amount, which was 500. On this 500 incremental creditor, who is responsible, sir? Only E is responsible. On such 500, you can directly make it presented to E. Now, you should get the total liability with respect to the creditors, right? It should be compared with unpaid value. It should be compared with unpaid value. What is the unpaid value in each and every case? 1000 into 4 rupees. Here 4000. 500 into 4 rupees, 2000. 1500 into 4 rupees. How much? 6000. 500 into 4 rupees, 2000. Now, whichever is lower is the liability of list B contributories. Whichever is lower is the liability of list B contributories, guys. Now, we will check one problem clearly through our material. I'll take problem number 4 or 5. In between, I left one problem. Yeah, this one. Please consider all of you problem number 4. Just I want to explain the entire concept of list B contributories through problem number 4, guys. In a liquidation which commenced on April 2nd, 2011, certain creditors could not receive the payments out of the realization of assets, indirectly telling that so the cash is insufficient to make repayment to the various parties. Okay. And out of the contributions from list A contributories are unable to make payment, then we can crystallize amount from the list B contributories. The following are the details of certain transfers which took place in 2010 and 2011. Now, the list B contributories are nothing but from April 3rd, 2011 to, April 3rd, 2010 to April 2nd, 2011. In between, what are all the different transfers occurred? Such all contributories we can make it as list B contributories. We can call it as list B contributories. Now, X transferred 1,500 shares as on 1st March 2010, which is not a list B contributory. It is before April 3rd, 2010. I should require after April 3rd, 2010. Next, A transferred 1,000 shares. Yes, after April 3rd, 2010, after April 3rd, 2010. That means except X, A, B, C, D are list B contributories. First, you need to identify this. Then number of shares transferred given, creditors remaining outstanding also given. All the shares were 10 rupees each, 6 rupees paid up, ignoring the expenses of to the liquidators, etc. Show the amounts to be realized from the various persons listed above. Now you should need to work out how much amount we can crystallize from the list B contributories. Now all of you consider here. Problem number 4, right? Problem number 4. Statement showing realization of cash among different list B contributories. So total, how many number of list B contributories exist here? Can you please check? I'll start with particulars. So here total A, B, C, D. A, B, C, D. So can you please tell me number of shares transferred? 1,000, 1,500. Next 300, 200. These are number of shares transferred. Number of shares transferred. Now, first you can start with outstanding creditors of 6,000. So outstanding creditors of 6,000. Who are all responsible, guys? All are responsible. A, B, C, D. All are responsible. In which ratio, guys? Can you please work out the ratio here? 10:15:3:2. 10:15:3:2. That is 6,000 into 10/30. Here 2,000 into 15/30. 3000 into 3 by 30, 900, 100. Am I right? Can you please work out, guys? 6000 into 3 by 30 is nothing but, sorry, 600. Yeah, here I got 600, here I got 400. So 6000 into 2 by 30, which I got 400. Hope you understand, right? Now outstanding rate of 6000 we are need to distribute in this particular ratio. Next, guys, just a moment. This is only number of shares information, nothing else. Now the incremental creditors, how much? Incremental outstanding creditors from 6000 to 7500 means 1500 is the incremental creditors. For them the ratio is 15:3:2. Now 1500 into 15 by 20, which we got 1125, into 3 by 20, we got 225. Now the remaining amount is 150. Next, the next incremental creditor is 800. So incremental outstanding creditors for how much? 500. That is 500. In which ratio, guys? 3:2 ratio. That is 300, 200. So the next phase 1500. On the incremental creditors of rupees 1500, directly you can give it to whom? Directly to D, which is 1500. Now you can cross check the totals. 2000, 3000. Now A is responsible for total 2000 creditors. B is responsible for 3000 plus 1125. 4125 creditors is responsible. For C, 600 plus 225 plus 300, that is 1125 he is responsible. And D is responsible for 400 plus 150 plus 200 plus 1500. He is responsible for 2250. So which is nothing but creditors balances responsible for individual list B creditor. Now it should be compared with unpaid value. It should be compared with unpaid value. Can you please check, guys, all of you, unpaid value per share how much given in the problem, which is 6 rupees. So number of shares you already know. 1000 into 6 rupees, which is, so 6000 paid up, right? That is 4000 unpaid value, right? That is 1000 into 4 rupees, 4000. 1500 into 4 rupees, 6000. 300 into 4 rupees, 1200. And which is 200 into 4 rupees, 800. Whichever is lower, you can consider whichever is lower here, all of you. Sir, 2000 or 4000, whichever is lower, that is 2000. 4125 or 6000, 4125. 1125 or 1200, which is 1125. 2250 or 800, 800. Now you can please make it total. Then you will get the total liability of the list B contributories, guys. What is the total liability of the list B contributory? 2000 plus 4125 plus 1125 plus 800, which is 8050 is the total list B contributories liability. This is the individual liability. Individual list B contributories liability, which is the total list B contributories liability. Like this you need to work out, guys. So the problem is very easy. Provisions are very easy, but I don't know why regularly testing such type of problems in the examination. So whenever they ask the liability of the list B contributories, you need to first work out on such particular liability how many number of list B contributories are responsible. So based on that, you can segregate number of shares held by such shareholders. The entire liability you can segregate to the individual parties. So whenever you come down to the next date, then you should only provide the responsibility towards the incremental outstanding, because the previous amount was we already considered. Only you can think about the incremental outstanding only. Do you agree, guys, all of you? Fine. So now let me please entering into the statement of affairs. All of you bear with me. I am a little bit speed for the today. You know the reason as well. Today is the last class. So the next concept is statement of affairs. Statement of affairs. Now all of you please concentrate here. You know actually how many lists are there in case of statement of affairs? Can you please summarize how many lists are there? List A, assets not specifically pledged, that is the pure assets which are not offered as security. List B, assets specifically pledged, those assets which are offered as security. And list B also contains secured creditors with a fixed charge as well. Then list C is related to preferential creditors. List D is related to secured creditors with floating charge. List E is related to unsecured creditors. List F is related to preference shareholders. List G is related to equity shareholders. These many lists are available according to statement of affairs. And one more thing, statement of affairs, all figures are actuals or realizable values. All are realizable values. All are estimated realizable values only. These are not the actual figures. All are estimates. Who will prepare? Liquidator. Is it liquidator? No, sorry, board of directors. For which purpose he will prepare? To make it submit to the court, and which is ultimately useful for liquidator. How it is going to be prepared by the liquidator? Let us have a look. Please all of you concentrate. I will start with list A. First I will start with here list A. List A stands for assets not specifically pledged. Sir, for example, what are all the different assets we have? Let us assume plant and machinery not offered as security, sir. Sir, land will not offered as a security, sir. Debtors not offered as a security, sir. Cash not offered as security. For all such things, the estimated realizable values you should need to present here, guys. The estimated residual value you need to present here. Then you will get total ERV. Then you will get total ERV of ANSP. Then you get total estimated realizable value for assets not specifically pledged. Sir, one thing, please all of you consider here. This is estimate, right? Now, board of directors will also estimate that if any unpaid value of the shares are there, that is nothing but unpaid value of the shares. Such unpaid value of the shares during the process of liquidation, if we have a chance, if we require the cash, then we have a chance to ask money from such a partly paid up equity shareholders, right? So that's why any uncalled capital is there. Such uncalled capital also, if you want, you can add here. Yes, if any uncalled capital is there, which is all our estimates, right? Whether it is required or not, I don't know. But now, what are all the different assets available for the purpose of realization? Just now, you are making presenting to the liquidator. So that's why any uncalled capital is there, which is also one of the asset. So during the process of liquidation, if the cash is insufficient, liquidator can ask money from such partly paid up equity shareholders. Then you can add here. Then you will get assets not specifically pledged, the total estimated realizable values, which is nothing but list A. Next, come to list B, all of you. List B stands for assets specifically pledged, right? Now concentrate. Sir, let us assume stock is there. Let us assume stock is there. So the stock in outside market, I realized at the rate of 15,000. I realized at the rate of 15,000. Just I'm telling for the time being, I realized in the outside market 15,000, which is ERV of the stock. It's not actual RR. RR estimated realizable value. Sir, while realizing the stock, we are estimated that we will get 15,000. Now the relevant liability is bank loan we have. Now the relevant liability is bank loan we have. Now secured creditors with fixed charge also we should represent here only, right? Secured creditor with fixed charge. Now the secured creditor with fixed charge is bank loan. Let us assume bank loan is there for only 10,000. Bank loan we need to pay only for the amount of 10,000. What about the 5,000? The excess of 5,000 is available for distribution among the various parties now. Now, if at all any excess is there, any excess is there, such excess is 5,000. Such excess 5,000 you can carry forward to the last column, guys. You can carry forward to the last column. So like from ANSP, how much is available? From ASP, this much of cash balance is available. The excess you can make it carry forward to the last amount column. It's not like that. Let us assume we have a bank loan for 18,000. Just another scenario I am telling. Now we are having a bank loan of 18,000, but the stock is realized for 15,000 only. What about the remaining 3,000? Deficit. What about remaining 3,000, which is deficit? Deficit amount is how much? 3,000. That deficit should be now ranked as unsecured creditors. Let me know, guys. We already checked that portion under liquidator final statement. Whenever you are realizing any particular asset specifically pledged, whenever you are realizing cash from asset specifically pledged, that cash is insufficient to make repayment to that particular liability, that is secured creditors with fixed charge, then the remaining liability you can make it termed as unsecured creditors. Now the deficit of 3,000 is ranking as unsecured creditor. You should need to make payment of such 3,000 along with the remaining unsecured creditors. That means if you have any excess balance, it should be carried forward to the last column. If you have any deficit, it should be ranking as unsecured creditors. Am I right? Now, if you add assets not specifically pledged and a surplus from assets specifically pledged, then you will know. Assets available for sir, for which persons it is available? It is available for make payment to preferential creditors, secured creditor with floating charge, and unsecured creditors. Now the balance what you will get, this is, you can call it as assets available for preferential creditors, secured creditors with the floating charge, and unsecured creditors. Sir, what about realization expenses? I mean, what about liquidation expenses? What about liquidator remuneration? Sir, in preparing the statement of affairs, we will ignore liquidation expenses and liquidator remuneration, because we don't know how much liquidation expenditure we are going to incur. Liquidator remuneration is also not decided at the time of presentation of statement of affairs. Do you understand? So that's why we are presenting this statement of affairs for a liquidator based purpose, as well as this is prepared by the board of directors. At the time of preparation of statement of affairs, we don't know such things. That's why we don't want to consider such figures. So in the basic mode, how much assets are available for preferential creditors, secured with the floating charge, and unsecured creditors, just you should make it represent here. Okay. Sir, apart from this information, just as a informative in nature, you can present summary of gross assets. What is the meaning of summary of gross assets, sir? From A and SP, total how much you will realize. From A and SP, in gross, how much you realize. From ASP, how much you will realize. From ASP, actually, how much you will realize. 15,000 actually you realize. This is the surplus column. After making set off with the secured creditors with fixed charge. But before making secured creditors with fixed charge, how much balance is you realized actually? That balance you can consider here. You will get summary of gross asset. This is pure informative in nature. Now all of you please observe. Now the assets available for preferential creditors, secured creditors with floating charge, and unsecured creditors is useful to distribute among such parties. Now I am starting the liabilities portion, which is liabilities. So concentrate, guys, which the portion is related to liabilities. Which is liabilities. So which is amount column, which is gross actually, which is also amount column, but which is net. What is the difference between gross and net, sir? Now all of you please check, concentrate here. What are the total liabilities? Liabilities means first I should need to start with this bank loan as well. Secured creditors with fixed charge, you can start. Secured creditors with fixed charge, how much, sir? In this case, 5,000 stock is there, right? In bracket, just you can mention stock. Don't put under the net column. You know why? We already made payment to the bank loan holder. Can you please tell me, guys? We already make payment to, it's not 5,000, it's 10,000 or something, whatever the case may be. How much it is, that amount you can put it. We already paid here. We already paid here. That's why don't put under the net amount column. Why? Because we already paid payment under list B itself. Now, if you cross check, now the total amount available is exist here. Then all the further payments, I should need to make payment from this amount only. Now, the next amount is preferential creditors. Preferential creditors. Preferential creditors, you should include it under the gross. You should reduce it from the assets available. You should reduce it from the assets available. From the assets available, if you make payment to preferential creditors, then you will get assets available as regards preferential creditors, or assets available for secured creditors with floating charge and unsecured creditors. How much balance is there? Then you will get. After that, you can make payment to secured creditor with floating charge. You can write under gross figure. You can record under the net column. Here you should need to reduce. Now you will get, just a second, I'm extending here. So once if you make payment to secured creditors with floating charge, then you will get assets as regards secured creditors with floating charge. Assets as regards. As regards means after making payment of. As regards secured creditor with floating charge, how much balance of assets are available. Now you can start making payment to, tell me guys, unsecured creditors, less unsecured creditors. So now unsecured creditors gross you can enter here, then you can make payment here. Then you will get assets as regards unsecured creditors, or you can write assets available to shareholders, guys, which are assets available to shareholders. Then you can reduce face value of preference share capital. Then you can reduce face value of, here always you should need to reduce the face value only, face value of equity shares. For example, if you have still surplus, then we can tell that surplus, or if you're having a deficit, which you can tell it as deficit available to equity shareholders only. Sir, more than face value still if you have, then the surplus balance or the deficit balance, we can make it term it as in shareholders point of view only, still in shareholders, equity shareholders point of view, how much surplus is there, how much deficit is there, we need to work out. Like this, we need to present the statement of affairs, which is too easy, guys. Only just you need to follow the format. There is only one thing you should need to do. All of you, we will start with assets not specifically pledged. After that, assets specifically pledged plus secured creditors with fixed charge, and the related fixed charge should need to be reduced from the realized value of the asset specifically pledged. If it is surplus, you can carry forward to the last column. If you get deficit, you can rank it as a unsecured creditors. Now you will having assets available for preferential creditors, secured creditors with floating charge, and unsecured creditors. Just for informative in nature, just you will present the summary of gross assets. Then you will start presenting the liabilities. Left hand side column is the gross column, right hand side column is the net column, which is a continuation of these columns. If you check all the columns under the right hand side, I'll make it present under the same direction. Now secured creditors with fixed charge only you can put under the gross column because you already paid under the list B itself. Then preferential creditors both under gross as well as net. Then after making payment of secured preferential creditors, you will get assets available for secured creditors with floating charge and unsecured creditors. Then you can make payment to secured creditors with floating charge. After that, unsecured creditors, then you will have assets as regards unsecured creditors or assets available for shareholders. Then you can reduce face value of preference shareholders and face value of equity shares. Then you will get surplus or deficit available to equity shareholders. But while presenting the statement of affairs, we are ignoring the liquidator remuneration as well as liquidation expenses. That point you should bear in your mind, guys. Next, one more thing. Please, this is not yet over. Please, all of you concentrate. This is not yet over. Now, we are presenting under different list, right? That is, preferential creditor is under list C, secured creditors under list D, unsecured creditors under list E, preference shares under list F, equity shares under list G. Now the surplus or deficit what we are getting, the surplus or deficit what we are getting, we can call it as list H actually. This was not told by me till now. So now I am introducing the list H. List H is surplus or deficit. List H is statement showing surplus or deficit. Now all of you please concentrate. Sir, it is the responsibility of the board of directors to explain why the company is ending with this much of surplus, or why the company is suffering with this much of deficit in point of view of equity shareholders. It is the responsibility of the board of directors. You know why? Till now, who conducted the business activities? Board of directors. Why you are deriving loss here? Why you are deriving surplus here? What are the things actually occurred? You need to present under list H separately. List H is nothing but reasons for getting surplus or deficit. Sir, the liquidator or that court, whatever the case may be, the court will clearly told that you should go back at least for the 3 years. You should go back at least 3 years from the date of liquidation. From date of liquidation, you should go back at least 3 years. And from here onwards, this is at least 3 years. From here onwards, you can explain how you derived the deficit from the beginning of before, that is preceding 3 years. From here only you are deriving this deficit. Here only you are deriving this deficit or surplus. From this beginning, from this ending, how you derive, you need to explain under list H. Like that, court will ask. Why? It is the responsibility of the board of directors to tell how they are deriving that surplus or deficit. Sir, we already explained, na? This explanation is through realization of assets and payment made to different parties. But really, what are the causes? What are the reasons for occurring this surplus or deficit? You need to explain through the preparation of statement of deficiency or statement of surplus. How they are presenting, please all of you concentrate. Now, as this date, that is at least 3 years, right? For example, date of liquidation occurred as on 1/4/2021. So at least 3 years means they go back as on 1/4/2017. Am I right, guys? Now, as on 1/4/2017, first what they will check, they will simply check reserves and surplus balance first. Reserves and surplus balance. Maybe there is a chance of occurring such reserves and surplus as a positive figure or maybe negative figure. Maybe positive figure or maybe negative figure. Sir, positive figure means assets are greater than liabilities plus capital. Tell me, guys, in the balance sheet, assets minus liabilities minus capital, then you will get the positive reserves and surplus. Then only you will get the positive reserves and surplus. If assets are greater than liabilities plus capital, then you will have a positive reserves and surplus. No, not like that, sir. Assets are less than, or I can put like this way, just a moment. Liabilities plus capital is greater than assets. Yes, liabilities plus capital is greater than assets. I mean to say, this portion is more, sir, this portion is less. Then you will get P&L account debit balance, right? Then you will get reserves and surplus negative. First, you should fix the opening balance. First, you should fix the opening balance of reserves and surplus. Yes, sir, I fixed the opening balance of reserves and surplus. From here, how you get the deficit? From here, you should add what are all the things made contribute for surplus. What are all the things may caused for deficit? You need to consider for these 3 years. Then you will get surplus or deficit at the end of the 3rd year. Like this you should need to present. Now all of you please concentrate. I'm going to explain the presentation of statement of deficiency. The statement of deficiency will start with excess of liabilities and capital over assets, which is nothing but negative reserves and surplus, which cause for deficit actually, which is the opening balance, opening excess of liabilities and capital over assets, which is the negative surplus. Now all of you please concentrate. With this, what are all the different items may contribute for the deficit, guys? Maybe in these 3 years, entity is ending with losses, trading losses. Entity is ending with trading losses, then you can include such trading losses also here. Sir, entity is having abnormal losses, not the trading losses. Maybe earthquake came, maybe floods are there, maybe pandemic situation is going on. All these are abnormal losses, which are also caused for deficit. Maybe in the 3 years period, you declared the dividend. Sir, if you are not declared the dividend, you would end up with surplus. Why you are end up with deficit? You know here why you end up with deficit, right? In between you earned the profit, but you declared the dividend more than the earned the profit, then you may end up with deficit. That's why maybe due to declaration of dividend, or maybe due to declaration of bonus shares, for such all things reserves and surplus balance will be decreased now. Maybe that is the reason for decrease in the reserves and surplus. One more thing, realization losses. Realization losses means now during the process of liquidation, you may realize the assets, right? Book value 1 lakh, but you realize 10,000, 90,000 is the realization loss. That is also caused for the deficit. That is realization loss is also caused for a deficit during the process of liquidation. Then you will get total balance, which contributing the deficiency, you know. Now I only consider losses situations. Now let me consider profit situations. Now if at all excess of assets over liabilities and capital is there, then which is positive reserves and surplus now? Then which is positive reserves and surplus? Here trading losses, here trading profits. Items contributing for surplus. This is items contributing for surplus, guys. Items contributing for surplus. This is items contributing for deficit. You should need to reduce one with other, then you will get net deficiency or net surplus. Okay, trading profit you can consider here, which is trading profits. Here abnormal loss, here abnormal profits. Here abnormal profits you need to consider. Sir, dividend or bonus paid, only deficit will come. Here this is realization loss, right? Here this is realization profit. Maybe more than book value during the process of liquidation we are going to realize. Now you will get surplus. If you reduce deficit from surplus, then you will get net deficiency or surplus, which should be exactly equal to this figure, what we got, the deficit amount under statement of affairs. So sometimes in the problem they may ask you to only prepare the statement of affairs. Sometimes they are also asked along with the statement of affairs, you need to present the list. 15 examinations, only one time appeared the question related to statement of affairs. That is also not related to list H. Statement of surplus or deficit, not at all tested in the examination, but once upon a time statement of affairs was tested in the examination. That's why in the order of importance I am discussing at the last instant, guys. But okay, anyway, whether it is important or not, that is not a criteria for me. If it is in the syllabus, I need to teach, right? Now come back to the problem. Let me explain the entire scenario. Just now what I explained in my OneNote. Now I want to check with the problem, guys, which is the last problem related to the statement of affairs. Please all of you concentrate here. Only 10 minutes is there. That is sufficient for me. I am unable to clarify doubts at this stage. I will clarify through your mails. Please, if you have any doubts, please you can send through the mails. Now let me allow to discuss problem number 11. X Limited was ordered to be wound up on 31st March 2012, on which date the following balances were extracted from its books. Goodwill is given, building, plant, fixtures, stock, debtors, cash, P&L account, debit balance is given, share capital, that is equity share capital, 5% debentures, interest payable on debentures, bank OD secured by hypothecation of stock. That means out of this stock is ASP, remaining all are ANSP, and this bank OD is a secured creditor with fixed charge. So let me first read the requirement. After that, I will read the remaining story. What is the requirement? What they want? Prepare the statement of affairs and the deficiency account. This is list H. Deficiency account or the surplus account is list H. Statement of affairs under the different list we need to prepare. Okay, fine. Next, the amounts estimated. Book values are irrelevant. Estimated realizable values are only relevant. Goodwill, building, plant, fixtures, stock, debtors is giving. Okay, now first let me start with list A and list B. I am going to explain this problem with solution. Please all of you concentrate. I don't want to put the figures in my OneNote. I'm going to explain through printed solution. First, what should I need to start? List A, assets not specifically pledged. List A, assets not specifically pledged. Goodwill 1000. Yes, goodwill 1000. Here we can consider, which is statement of affairs. Estimated realizable value, which is assets not specifically pledged. List A, which is missing. List A, assets not specifically pledged. We started with the goodwill. Next, building 3 lakhs. Building 3 lakhs. Next, plant and machinery 5,25,000. Plant 5,25,000. Fixtures 10,000. Fixtures 10,000. Stock. Sir, stock we are not recording under assets specifically pledged. Why stock? Stock not recorded under assets not specifically pledged, which is an asset specifically pledged, which is related to list B actually. It's related to list B. We are not going to record now. Debtors 20,000. So debtors 20,000. One more thing, cash is there, guys, with us, which is always assets not specifically pledged. You are also considered cash. Total he will get 8,56,500, which is the total of ANSP. Now come to list B, assets specifically pledged. Come to list B, all of you, assets specifically pledged. So with which value you should need to start? Assets specifically pledged. Only one asset is there, which is stock. Stock ERV how much? 31,000. You are getting 31,000. What is the relevant liability? Bank OD 25,000. You are compare 31,000 with 25,000. Still you are having a surplus of 6,000. That surplus of 6,000 you can carry forward to the last column. Now 8,56,500 plus 6,000. Total assets available for preferential creditors, debenture holders secured by floating charge, and unsecured creditors. You are getting 8,62,500, which are total is 8,62,500. You have, which is available for preferential creditors with floating charge and unsecured creditors. I told you as an informative part, you should need to provide the gross summary of assets, which is ANSP 8,56,500 plus 31,000. Just as an informative, you should need to provide summary of gross assets, that is gross realized value from assets specifically pledged, that is from stock, which is 31,000, and for other assets means which is assets not specifically pledged, total 8,56,500 plus 31,000, you will get 8,87,500. This is simple informative in nature. Now you should start with liabilities. Now, which is the gross amount, which is the net amount. Am I right? Now, first start with secured creditors with fixed charge. 25,000 only present under the gross, don't present under the net because we already reduced here. The next item is preferential creditors. Now come here, let me read the further problem. I stopped the problem in between. Now let me read the further problem. Creditors include 6,000 on account of wages of 15 men at 100 rupees per month for 4 months immediately before the date of winding up. That is, entire 6,000 is a preferential creditors. 9,000 being the salaries of 5 employees at 300 rupees per month for the previous 6 months. Out of the 6 months, you can only consider the 4 months. 4 months into 300 into 5 employees, which is also 6,000. Now, first 6,000 is the preferential creditors. Out of this 9,000, another 6,000 is preferential creditors. Rent for godown is not a preferential creditor. Income tax deducted out of the salaries 1,000. This is also preferential creditors. Director is not an employee, guys. Director is not an employee. Managing director is an employee, but director is not an employee. That's why payment related to the directors is not a preferential creditor. Next, one more thing, if you check here, in the last actually it is given that in addition it is estimated that company would have to pay 5,000 as compensation to an employee for injuries suffered by him. Sir, compensation belongs to employees is also a preferential creditors. Now you can check the total amount of the preferential creditors is how much? 6,000 plus 6,000 plus 6,000. So total it is 18,000 guys. Total it is 18,000. That's why I will make payment to preferential creditors which is 18,000. Now if you reduce 8,62,500 minus 18,000, then you will get 8,44,500. You should record under gross and net as well. Now the remaining balance of assets available for debenture holders secured by a floating charge and unsecured creditors. Next, you should find out the debenture holders secured with floating charge. If you consider here, debenture holders secured with floating charge is there for 1,60,000. Is there for 1,60,000. And interest payable on such debentures is 4,000. The total amount is 1,64,000, which is secured creditors with floating charge. You can make payment that. Then still you have a cash balance of 6,80,500, which is estimated assets as regards estimated surplus as regards debenture holders. After making payment to the debenture holders, still the estimated surplus with the liquidator 6,80,500, which is the estimate given by the board of directors. Next, unsecured creditors case. All of you, can you please check out how much balance is the unsecured creditors? Now, out of this creditors 36,000, you already considered certain portion. You already consider 13,000 in the form of preferential creditors. Am I right? Total preferential creditors is 18,000. I too agree. But out of that, 5,000 separately considered na. Then 18,000 minus 5,000 means 13,000 only with respect to of these creditors you considered as preferential creditors. Now 36 minus 13,000, how much? 23,000. The remaining creditors are unsecured creditors only. So unsecured creditors is given at 23,000. Sir, what is this figure, sir? Estimated unsecured balance of claims of creditors partly secured on specific asset brought forward, nil. What is this, sir, actually? Please, all of you consider it here. For example, here actually you got the surplus now. On behalf of getting surplus, if you are ending the deficit ranking as unsecured creditor. Now under the list B, if any portion of secured creditor with fixed charge is unable to make payment, we are ranking it as unsecured creditor na. It should be considered at the time of making payment to the unsecured creditors. That's why that portion is giving it as a nil. So now after making payment of unsecured creditors, the remaining balance available with the liquidator is 6,57,500, where the equity share capital is only exist given in the problem 10,000 into 100 rupees face value is 10 lakhs. Now he reduced the 10 lakh. Now he is getting the deficit of 3,42,500 guys. Like this, you need to present the statement of affairs. Next, one more thing. Sir, how this 3,42,500 derived? You should provide the list H deficiency account. Sir, now all of you please concentrate how I provided this 3,42,500 as loss. I should go back to the 3 years. So the further information is given in the problem if you check. So now the date of liquidation is occurring as on 31st March 2012. If you go back to the 3 years means from 31st March 2009 onwards, you should need to start. That's why he provided the information 910, 1011, 1011 and 1112. Total 3 years information just he provided here. Now first you need to find out the losses. Trading losses, how much? Can you please check all of you? Trading loss, which is the gross profit and total of expenses. Gross profit minus total of expenses. Gross profit minus total of expenses. 65,000 minus 80,990. Here the loss is 15,990, which is the trading loss. For this year, 45,000 minus 66,245. I got a trading loss of 21,245 here. Now coming to the last year, 40,000 minus 63,340. I got a loss of 23,340. Sir, this and all expenses, guys. This is gross profit. Gross profit minus total of expenses, you will get losses. You can add all these losses, guys. You can add all these losses. Minus 15,990 minus 21,245 minus 23,340. I got the total losses of 60,575, which is the total trading losses, guys. Okay. Apart from that, Is there any abnormal losses? Not exist. Abnormal losses is not given. Any dividend declared? Not given. Bonuses declared? Not given. Apart from this, you need to find out the realization loss. Realization loss means these all are book value. Different estimated realizable values are given. Please all of you concentrate. Goodwill realizable value is 1000, but the book value is how much? 1 lakh. 99,000 is the realization loss for the goodwill. Next, come to the building. 3 lakhs is the realizable value. 3,50,000 is there. 50,000 is the loss. Next, come to the plant. 5,25,000 is the realizable value. 5,50,000. 25,000 is the realization loss. Fixtures book value 23,000. You realized at 10,000. 13,000 is the realization loss. Stock is 38,000. How much you got for the stock? 31,000 only. 7,000 is the realization loss. Debtors book value 25,000. You realized at 20,000. All are losses, guys. There is no surplus at all. Now you can make it total here. 99,000 plus 50,000 plus 25,000 plus 13,000 plus 7,000 plus 5,000. So here total loss I got 1,99,000. Now you can go to the statement of deficiency to my solution. Please all of you concentrate here. Now first net trading losses 60. Just ignore this. Just ignore this for the time being. Net trading losses, how much you get? 60,575 in the solution, right? Now you can check. We also made it the net trading losses 60,575. We got it. Made it the same figure. Next, realization loss you got, right? The total realization loss I got 2,04,000. But here we got only 1,99,000. Don't bother about that, sir. Where we do mistake? We are not committed any mistake. 1,99,000 plus excess of liability you paid now. Excess of liability 5,000 as a compensation you paid now, which is not there in the balance sheet, but you are paying means which is also realization loss. That's why you can add 1,99,000 plus 5,000 loss. Then the total is 2,04,000. So which is the realization loss of 2,04,000. Now hope you understand 60,575 and 2,04,000 total losses how they are getting. Now in opening, whether you are getting surplus or deficit, can you please check? In opening, 3 years ago, the debit balance in the profit and loss account was 77,925, which you can take it as opening reserves and surplus balance, which is negative means excess of capital and liabilities over assets. So that's why which is also deficit, they directly taken 77,925. Now the statement of deficiency start with opening reserves and surplus, then you are adding trading losses, then you are adding losses due to realization. There is no item contributing to surplus. There are only items contributing to deficiency only exist. If you make it total, then it should be equal to 3,42,500. In statement of affairs, we are getting the same amount, which is 3,42,500. Thus, that is nothing but list H statement of deficiency, guys. So for importance wise, this is not that much of important. That's why I don't want to take in such deeper manner. If you can read, you can easily understand from your end as well. Okay. Now concentrate, guys. Please all of you bear with me for 5 minutes. Sir, coming to our schedule, I actually discussed 3 different chapters. One is amalgamation, another one is internal reconstruction, another one is liquidation of companies. In case of amalgamation, the major issue is PC calculation, accounting treatment in the books of selling company, accounting treatment in the books of purchasing company, both in case of purchase method, pooling of interest method. So the PC we are work out in different methods, that is lump sum method, NAV, net payments method, NAV method, and intrinsic value method. Am I right? In selling company, I prepared the 5-step approach. If you apply the 5-step approach, you will get the answer. In purchasing company also, we discussed entirely neatly all the things. Now, the only difference between purchasing method and pooling of interest method, here you will compare PC with NAV. If PC is greater than NAV, goodwill. If PC is less than NAV, capital reserve. In case of pooling of interest method, you are comparing PC with NAV means share capital of the selling company. Then if PC is greater than share capital of the selling company, the loss should be make it set off with reserves, free reserves and surplus after takeover. If you get the profit, again, you should make it transfer to capital reserve. Such points, please, all of you bear in your mind at the time of preparation of amalgamation. In internal reconstruction, we done various problems. So the proper internal reconstructions are nothing but alteration of share capital, reduction of share capital, variation in shareholders right. Majorly we discussed about compromises and arrangement, and share surrender concept also I discussed. Am I right? So after internal reconstruction, you should add the word capped, that is unreduced. Either you can make it prepare the internal reconstruction entirely by crediting to capital reduction account or by crediting to reconstruction account, but you can follow the uniformly. So after completion of all such things, you should need to nullify the profit and loss account debit balance. Still, if you have any balance, you can make it transfer to the capital reserve. If the balance is not sufficient, you can use the balance which is under reserves and surplus. Now in liquidator, majorly my concentration is related to liquidator final statement. After that, I discussed overriding preferential payments and preferential creditors and list B contributories. Just I seen statement of affairs in the bird's eye view manner, not in the deeper manner. Do you understand? So still, if you have any technical difficulties for understanding the concept at the time of understanding the problems, please let me know. You can freely contact with me. Once again, I am representing my mail ID here, casatyarazu2016@gmail.com. Already some of your friends are sending the queries. I'm not getting a time to answer such queries. So once if I finished off this lecture, then I will be free. So at whatever the time, you can relate it to advanced accounts as well as accounts. Any chapter, that is up to you. I have very good grip on both the subjects related to accounts and advanced accounts. If you have any problem, any query or way of preparation or way of style, whatever the thing you can require, you can send a query to that mail. I'll definitely give a reply. So hope you are enjoying my session. Hope you understand each and every pin corner. So due to lack of time or due to time constraint, a certain point of time, I completed the portion at certain areas. In very certain areas, I completed it speedy manner. So still you can understand after reading from the text which was given. As I promised you, I will upload the entire materials of accounts as well as advanced accounts to the PDF corner. You can use it for the further reference. Bye-bye guys. Have a nice day. Goodbye. See you. Signing off by CS Acharaju Kolluru.